This is the Bank Nifty daily charts. Interesting day today. What was looking like upward momentum went up and came crashing down to close lower than yesterday's high. It was a very interesting day and a very volatile day. So let me take you to what actually happened today. So yesterday I didn't record the video, but these were zones that we had created. We were creating some zones because where the market was to where our next zone was around 38,100, we didn't have any resistance zones forming. So we're trying to make other resistance zones by using other strategies. One of them were typically look at a big candle and about 50% of it can be either resistance or support. So we had this candle, we had this swing high. You can see the market came here, came down, tested it, again got rejected, and again here a 50%. So we were looking at these three levels that were going to help form our decisions in making sure how we can trade for today as well. So yesterday the market closed at 37,741 and today it opened up at 37,768, and yesterday the straddle closed at 876 and today it opened up at 863. Now this is not for the 7th expiry, this is for the 14th expiry. We decided that trading for the following week, especially because we trade in the Bank Nifty, we get, because of liquidity, we have the ability to trade that much. B, premiums are higher, ranges are wider, so we can absorb days like how we had today in all of our things and come out as best as we possibly can. So the market opened up, created a big candle, tested a small zone that we had there, and essentially just took it out. Um, Option chain was interesting through the day. As the 930, 940 was there, option chains calls were written at 38,000 and 37.8. Markets around 37.8, 37.9 at this point. And the puts were all written again at the money, 37.8, and a lot were written at 37.5 as well. So we were getting signs that it may be a relatively range bound day from the first 15, 20, 30 minutes of looking at the option chains. But around 10:30 or so, we got news that the US treasuries were at all-time highs, not all-time high, but highs since June. So last 5-6 months, it's reached high, typically indicating that it could be a reversal sign because FIIs may pull out and put money back into their markets. So we were expecting that, had a slight delta negative view around here and waited to see what would happen around these zones. Now, this one was taken out in the beginning. We wanted to see what will happen. So we're seeing this, but around 11:30 or so, right, when we were getting signs that both zones may be taken out, we started adding a few puts in the mix. We had a delta negative view, but if the markets were looking very bullish, we have to keep adjusting our positions, and essentially that's what we did all the way till 12:15 when this zone was tested, and when it got tested it got rejected and got rejected fairly quickly. One of the things that we had also drawn was this trend line. Let me show it to you. We drew a trend line from here all the way to here. So we were keeping an eye on this trend line, and until it broke is where we were looking at trying to switch positions back again. Another potential big candle, we drew a line here. So you can see around this 37, 800, 820 range is what we were getting confirmations. This trend line broke here. This candle came down and came up. So we thought maybe this was a false breakout and we were waiting. And again, since this started coming down as well, we started switching again back to a delta negative position. And in all this chaos around 1:30, IV started going very high. What opened up, I think, around 1920 became 23, 22, 23. India VIX also was high, which indicated that premiums were higher, everything was going to be higher. So in a time where market was swinging up then swinging down, we didn't really panic. We kind of held positions because premiums were high. It didn't make sense to cut positions at this point. Typically, what another strategy that we realized is on Friday the straddle prices open up around 650 odd levels, and today the straddle prices closed at 929. It opened up at 863 and closed higher today. So therefore there's a lot of decay potentially left tomorrow to see what the market can actually do for us if you have to get a considerable decay. That's why we held our positions overnight as well. Now, our plan for tomorrow is this. We've got a wide range. We've got to see what we've got to plan for. Now, these are um, sort of levels that we are looking at, right? 37,850 or so. If the market comes up, that's a level that we got to watch out for. Down, we've got this swing level, right? 37,300, 400 levels. Again, no zone created, but you can see the market coming here, getting tested and bouncing up. There's a lot of support around 37,400 levels, but there's also this gap that hasn't been covered. So if it breaks, it can come down to 37,200 levels. So that's kind of what we are waiting and watching. Overall, global cues and global markets are looking negative. Um, so we're kind of waiting to try and see the impact of that in the morning. Positives are slight that the oil prices are down 2%. US Treasuries, what was up 2.3, 2.4% in the morning, is down. So we're getting kind of mixed signals as of right now. This is around 10 o'clock at night that I'm recording this. So again, our plan again is to wait, build our positions, take into consideration that is considerable decay left for us tomorrow, so we can be flexible on our positions. Overall, we are have a slight delta negative view. So if the market opens up lower, starts covering this gap, will be fantastic for us. We'll be able to kind of hold positions, maybe book some profits as well. But again, we're going to be playing this till Friday. So we've got an ability to see what happens tomorrow, see what happens on Friday, get those decays, get those premiums in place so we can end our week in profit.